slide, I would like to just introduce you to our speaker today. He is now in Singapore. He's connected to us to this webinar from Singapore. He's our risk consultant, Shabirin Binhan. Shabirin, we are very lucky to have Shabirin because he has over 20 years of experience in risk management. He held several positions at various companies such as Fitch Ratings Analytics or Moody's Analytics. So without further ado, I let Shabirin continue with this presentation. I wish you a very insightful and interesting webinar. Thank you very much.
Thank you, Mini. Good day to all of you, and thank you for making the time to attend this webinar. As mentioned earlier, the topic for today will be on preventing internal fraud at financial institutions. Let us take a quick look at the agenda for today. The content will be on internal fraud, and then we will look at some internal fraud use cases, how to mitigate them, a short demo on how the methodology NetGuardians is adopting, or how we are proposing to tackle these internal frauds, followed by an end-to-end risk mitigation techniques and methodology, and of course the Q&A at the end of the session. As Mini have mentioned earlier, we will interpose the webinar with a couple of short Q&A sections. So if you have any questions, do message all these questions so that we can be addressed during these intervals. Yeah. So let me go to the first slide. Let us look at some statistics on internal fraud. Recent studies have shown that 70% of all fraud is internal. And recently, there are also reports on internal fraud being as prevalent as cyber fraud. However, the difference is that internal fraud is hard to detect and hard to capture the perpetrators of the crime. And if you look at the total value in terms of the losses to be made, 67 billion in terms of banking fraud in 2014 alone. Of course, this is the known number. Sometimes some of these crimes have not been caught, and therefore the numbers may not have been totaled up together. So if you were to add up, it does constitute to a fair big amount of value, and this could definitely affect the bottom line as well as the potential top line of any institution. From these reports, I think reports from the Association of Certified Fraud Examiners, you can see that 70% of this fraud is from insiders, from employees who are aware of the bank processes, who are aware of the operations of the bank, and is able to exploit any gaps or any loopholes within the bank itself or failure of internal controls to commit the crime. Right? And if you look at the numbers further, a high percentage, or rather 3/4 of financial service companies actually experience at least one incident of fraud in a particular year. So this is again very alarming. But having said that, we have to look at what are the possible methods and processes that we can implement to capture internal fraud. This is not a new issue. This has been around for a while. However, the techniques and process needs to evolve because fraudsters are becoming more and more sophisticated, and the methods that have been employed in recent cases, I think I will go into those use cases later on, have been very, very sophisticated and very, very advanced. Let's go to the next slide. So let us look at the major cause of internal fraud. So here you can see that most of it is due to lack of internal controls. Sometimes there's also an override of these controls, which means that there are signs of impropriety or signs of fraudulent practices, but this will actually ignored, or processes or procedures will not followed. In some cases, you do have fraud prevention measures, you do have solution applications in place, but the effectiveness of all these solutions is as good as the execution. So if there's any possibility of overrides, if there's any possibility of of these measures to be sidestepped, then the opportunity will always avail itself. 19% of it is also due to the lack of management review. In some cases, I think in one of my case study afterwards, you can see that some of these signs are apparent. In fact, it has been highlighted, that management choose to ignore them or choose not to take action. So as you can see, in order for you to be effective, I think you have to be more proactive. Your methodology have to keep up with the times, and you have to evolve with the behavior as well as the transaction patterns of operations. Let's look at the chronology of internal fraud, how it happens, how it gets perpetrated, and finally how it gets executed. So here you can see the classic 6C of fraudster. Basically, a fraudster would first commit a case. First you will look at a case to commit the fraud. For example, this can be opportunistic, or it could also be due to pressure. Pressure in the sense that it may be in the point of his lifetime where he needs to make big purchases, like buying a house, a car, etc., and he needs to have the cash to do that. The opportunity arises from the fact that there are gaps, there are loopholes, or he may have come into awareness of a possible breaches, possible way to gain access to certain data or certain accounts, for example, like dormant accounts, which may not be necessarily available to him normally or given his role. And then due to this, he can commit a crime, after which he will try to consolidate how he does this. There's many ways that he can do it. We can look again later on in detail on some of the steps that can be done and how the system could actually prevent or preempt this. And obviously, once you commit a crime, you would like to convert it into something tangible. So in this case, if you misappropriate money, if you siphon money out of a dormant account, you will look to convert it, to launder it, and to, of course, benefit from it. So that's from the fraudster perspective. From the victim, on the other hand, is that after the fact, after the crime has been committed, how do you catch and how do you apply the control, right? So this is, again, after the fact, is very hard for the fraud to be detected afterwards. A lot of analysis, a lot of investigations needs to be done. Sometimes it may have elapsed over a period of years before this is highlighted or caught, and then the measures or the controls that is applied may be too late. So let's look at a short use case of internal fraud and collusion. In a recent article, you can see that last year is a major year for data breaches, right? So last year in 2016, statistics have shown that data breaches are very prevalent. So more and more data breaches is happening to banks, to companies, to associations, to basically just anyone who are not wary or does not implement good controls in the institution. So in this situation, I think the two banks involved are Lloyds and RBS in UK. And you can see that the total amount lost is £113 million. So this is a fairly large number, a large amount by any standard. And how does it happen? Lloyds have fired three employees from this episode. They have found that 3 employees have colluded, have extracted data, identity theft, etc., and then pass it on to outsiders, or send it to outsiders in terms of the operation, etc., for them to use it to gain knowledge of these accounts, and therefore transfer the money illegally to other accounts for their own benefit. So for this instance, what happened is that the data that has been siphoned off or been stolen by the employee are given to the criminals. The criminals use this information to call the victims and act as if they were from the fraud management team of the bank. They are very convincing, they're very realistic, and here you can see that definitely they have done their research, they're well organized, and they definitely have inside knowledge of how the bank operates, how the fraud management department of the bank operates, etc., in order to gain the trust of the users. When they make the calls, in the background they have an army of users who then log into these accounts by using information or sensitive information that they have gained by gaining the confidence of the clients or the victims themselves. And quickly they will start transferring money on the spot to various accounts, and then the withdrawal from this account is also done as swiftly. So the money trail here is very large, but in terms of detection and in terms of getting caught, it's very difficult to detect quickly if you do not have the proper process or the proper system to do it properly. From the victims, by the time they realize that the money is gone, it's too late. You know, when they call the bank and say, what happened? I've seen transactions, unauthorized transactions that has been done on my account, etc. But when the bank did the initial investigation, they found that the transaction was legitimate. You know, the PIN was entered. You know, the two-factor authentication, etc., was correct, etc. So it takes a lot more time to do the investigation. So I think in order for you to really prevent internal theft, internal fraud, the key here is on prevention. So we will look later on methodologies and processes in which internal fraud can be prevented before it even happens. So as I mentioned earlier in my earlier case study, you can see that 6% of banks' pre-tax profit are lost as a result of criminal activity. So this is a fairly significant number. So if a bank turnover is 100 million, 6 million is lost due to criminal activity. So you can reduce this amount of losses. You can essentially build up on your bottom line. And again, from this, you can also gain public trust, you can gain trust, and therefore you can gain from your top line as well, from extra business opportunities that the bank can explore. And you can see the duration for which the fraud can be detected is 18 months. So this is a long time, right? So like I said in my previous case, you know, in terms of the actions, it is legitimate. In order for this investigation to go further, it takes a lot of time, a lot of effort. You have to look at data from across various channels, from various sources, and then all this has to be correlated, reconciled before you can pinpoint the perpetrators. So in 18 months, you know, these days is very efficient, very fast to transfer money. Most of the time, there's no recourse for the victim. So let us recap on the challenges faced by the banks in preventing internal fraud. So first off, you can see that in most institutions, there are solutions for internal fraud, there are internal controls, there are operational risk measures, etc. But most of the measures are silo-based solutions, and these are restricted to just one channel or just a few channels, and there was very little collaboration or sharing of information between department and to another department, or between one channel to another. So I think the key question to ask is, how do we leverage on all these available data? Because most banks, we have large data warehouses, we have large data capture that potentially can provide insight into how fraudulent practices could be curtailed or could be prevented, right? The other major issues, or major challenges that we see is the large number of false positives, because the rules or the rules and methods are fairly static. Sometimes it leads to large number of false positives due to the fact that, you know, the user behavior, transaction behavior, etc., have evolved, and therefore the previous rules may not be as accurate as it needs to be. So the sensitivity of all these measures needs to be tuned. It has to evolve with the user behavior, the client behavior, as well as the usage patterns of the bank's operations and the client. So like I mentioned earlier, many of these solutions are based on rule-based solution, and therefore it's very static. It's very tedious to review them periodically, since it's not automated, and sometimes the time for the solution to be effective is also fairly sizable, right? So for example, even if you need 3 months or so to validate, to put in place a new rule, it might be 3 months too late. And again, going back to the channel, you can see that for financial transaction, you know, we do have financial transaction monitoring, etc., as stipulated by the regulators, etc. But again, this is very specific, and it's not widely shared across all channels, and therefore the sharing of data, collaboration, and the insight that can be derived from this approach is lost. So obviously, with that, you know, since this is very specific solution tailored to specific channels, it's not scalable in its approach. So just to take a breather here, any questions so far?
Well, thank you, Shabirin. So we can give a few minutes for any potential questions, and we have a good one here. Actually, just to go back to your slide, could you explain a bit more what you mean by silo-based solutions for each channel, and what are the potential problems, challenges there?
Okay, so for example, for let's say credit card, right? So you may have a credit card fraud solution that looks at fraudulent transaction for credit card. So this is what I meant by just one channel. So you may have a very comprehensive mitigation solution for credit card, where you look at the credit card patterns for irregular spend, transaction approach, etc. However, assuming this credit card is first used in the country, let's say out of, let's say in Africa, for example, but the person is based in Singapore. So in this case, the first transaction may be considered as valid, right? But if you were to leverage on other information, for example, the person has just logged into his online banking in Singapore, but then now he's spending physically in, let's say, a shop in Africa. So clearly, this doesn't reconcile. This is should be flagged, and it could be a potential fraud, right? However, if you just look at a single channel, if you just look at the transaction data for credit card, the initial spend in Africa might be valid because the person might be traveling to Africa, genuinely on business or on holiday, and be spending physically in the shop, right? So how do we correlate the data? And this goes into my second point, which is on the large number of false positives, right? So conversely, I mean, if you're just looking at single channels, right, without looking at the other data, you can also have a large false positive, because you cannot reconcile this data with other information that could be coming from other sources, right? So, for example, if you look at say internal fraud, where a person is on vacation, but he logs in from his terminal, right? So again, if you were to reconcile the two cases, if he's on vacation, his terminal is being used, and he's logged in as himself, this is not correct, right? But if you just look at the solution from the fact that he logged in using a valid ID, using the IP address of his normal desk, then that is a valid transaction that he's doing, right? So things like that will actually affect the sensitivity of your measures in controlling fraud or in preventing fraud, as well as reducing as well the number of false positives that you may get from a particular approach or method.
Okay, thank you, Shabirin.
Any other questions before I go into the next schema here?
There's one more question. I think it's also going well with this slide here that you're showing. Like, there are questions about the data. Okay, we all hear about big data and the whole available data, but where to start? How can we use actually our data for internal fraud prevention or banking fraud prevention in general? Because this was also one of the challenges you mentioned. If you could just also explain a bit more.
Okay. That's a very good question, right? So again, I think the typical bank these days, or typical financial institution these days, have multiple data silos, or even data warehouse or data lake, right? So how do we leverage on all these data? How do we use this data to provide insight to help us in preventing fraud, right? And also in terms of looking at various factors that may affect a particular action. So here, I think in terms of data, the NetGuardian methodology is that we are using big data technology, which means that we can accept or we can process data in multiple formats from different sources, etc. And once we have this data, we will look at correlations. We start looking at correlations. We start looking at patterns, and we do further analytics and analysis on this to see whether it could lead to fraudulent practices or fraudulent behavior. Like, for example, I already cite the example where an employee may be on vacation, but his terminal is being used and his user ID is being used. In some cases, if he goes for a long enough vacation, his user ID should be suspended. I think this is just more internal control. But what if he's on vacation for a short period of time and he may coincide with a public holiday which does not warrant his ID to be suspended? So how do we identify this as a breach? If you look at the HR record, we can see that he's on vacation. We can also look at the card system for access to his floor or to the department that he's in, and we can see whether he badged in or not, right? So by correlating all this information together, we can see whether it is really a lawful transaction, whether the person himself is making the transaction or someone else is using his terminal and pretending to be himself to do other things or other operations which is not sanctioned, right? So these are just an example of how data could be correlated, how data could be brought together to provide insights and to also decide whether it could be a genuine case or not, therefore reducing false positive, or to highlight it quickly for the system to be caught. So for example, if it's an identity theft and someone is really doing illegal work when the person is on vacation, and an email could be quickly sent to the compliance officer or the monitoring officer, and he or she could actually send this to alert the security guard for him to go to the desk itself to catch the person red-handed. So again, this is minimizing the time in which we can detect. Hopefully, we can even prevent the internal fraud itself.
And Shabirin, we can just take one more quick question. If you go back to your challenges slides, we have a question about scalable solutions. Well, could you please explain what you mean by scalable solution there?
Sure. So again, I think let me just go to this diagram. I've mentioned that we use big data as the platform in which we process data or we analyze data. So when I mean scalable, so we can use any data that you have available in the bank from various channels, from various domains or various departments in the bank, and then we try to draw insight from it. So in the future, if the bank evolves, if the bank choose to have other applications or other data warehouse or data lakes, we can then also consider this data and apply the same rules and also work on the correlations between all this data to gain insights or to come up with reports which might be meaningful or to generate any violations that may occur or happen based on either behavior pattern, the profiling, and a few other factors that or rules that we could implement or deploy within the solution itself. So that's from the data perspective in terms of scalable, in terms of processing, hardware, etc. Because again, we're using big data technology in terms of scaling the hardware, putting in more processing power, etc. That is also easily done, with multiple processing, etc. So that is also the beauty of being highly scalable and leveraging on the big data technology. So does that answer the question?
Okay. Thanks, Shabirin. I think so. If there are any remaining questions, please you can ask more.
Okay, sure. Thanks. So I think just to go back to this schema. So as I mentioned, the way we have broken up the processes is that by using big data technology, we can consider data from various layers, the IT layers, channels, transactions, and put them all together. And as the data evolve, as the transaction pattern evolve, with machine learning, with predictive analytics, and also dynamic profiling, we are able to evolve the basic rules that we have deployed initially and make it more current so that it's more applicable to current situation. For example, if you have a user or client that is a loyal customer of the bank or financial institution, if his changes evolve, or even for the employee, as he stays, as he works longer in the company, his lifestyle may change, etc., and his scope of job may also change. So sometimes, in understanding the behavior pattern, in understanding the user behavior, we will be able to understand whether there's a motivation for him to commit any fraud, or whether there's a high likeliness of him to do it at a particular point in time. I mean, if you look at the profile of fraudsters in recent times, you can see that sometimes some of these fraudsters are are not known to be fraudster, right? I mean, basically, in terms of their behavior, in terms of the nature, if you know them, they don't look like as if they would commit a crime. But due to pressure, due to circumstances, due to life changes, they may be tempted to do this fraud, and especially if we can get away with it, they may eventually succumb to temptations and commit the crime itself. So by looking at the user behavior, by looking at some predictive modeling, we can try to be more sensitive and more accurate to how we flag out violations and also increase the likelihood of preventing a likely fraud action. So I think that's more or less what we're trying to do. And as you can see in the schema, we have all the methodologies mapped out. We have all the various analytics, how we do. We start by the basic rules, by having basic logic, tree, etc. And then as the transaction evolve, as the person's role or operations evolve, the data will be kept current and be fed back to these models to ensure that all these preventative measures are not only current but also tailored specific to the particular user or client, right? So again, as you can see that we built a profile database over time, and this is being used as a loop back, right, to ensure that all the measures are current and will ensure that they will evolve with time and preference. Okay, so let us look at another use case. So I think this is a fairly big and well-known case in terms of systemic failure. The Wells Fargo has been flagged last year for fraudulent practices where a large number of accounts have been created without the consent or without the knowledge of the account holders whose name has been used in these cases. And in other cases, some of the packages, some of the financial product has been sold has been misrepresented, all for one reason, right? To commit fraud, to make more money, and to gain advantage in terms of monetary benefits. So you can see that this is very opportunistic. If you look at the circumstances, this is opportunistic. It happened over a long period of time, undetected, or I would say probably no action is taken. There have been signs that emerged more than 10 years ago, but it's been largely ignored or no action has been taken, and therefore the problems become more chronic as the year goes by, and the losses when he was caught was fairly large, and a large number of accounts was also created for this purpose. So from this incident, we can see that even though there are processes in place, there are fraud applications or operational risk mitigation techniques, but there was no coherence. There was no coherence in terms of processes between channels and what to do with these breaches or with these feedback once they are found, right? And obviously, this is again the result of employee collusion. If you look at the aftermath, I think more than 2,000 employees were sacked, were fired from Wells Fargo, and this constitutes about 1% of the workforce. So you can see the gravity of the situation. If you let something grows, if you let something fester for a long time, it becomes more chronic. More people get involved because they can't get away with it, and the problems becomes a bomb, right? So when they explode, you can see there are many litigations at the moment, fines from regulators. They've been made slapped with a higher penalty in terms of regulatory compliance, operational risk, and surely there was going to be an impact on both their bottom line and the top line, right? So Wells Fargo, up to the point where they were caught or this issue was highlighted, they were the darling of the American banks. They were one of the biggest bank, and they were growing at a very, very healthy rate. So due to this, I think the management have also decided to put aside some of the grievances or some of the feedback that the employees have provided, and also some of the clients that have provided in terms of suspicious transactions, etc., on their accounts, and behavior of the fellow colleagues, right? So again, so I think if the problems are not curtailed in the bud at the beginning, chances are you will grow into much more chronic problems sometime down the road. So let us look at how NetGuardian would handle such a situation, or if, for example, Wells Fargo is to apply the methodology or the processes that I've mentioned earlier. So let's look at a quick run through of how NetGuardian would handle the process. So here you can see that we're just logging into the dashboard, where a compliance officer or monitoring officer would have all this information at his disposal. Right. So here, this is a dashboard where you can see a lot of information at a glance in terms of violations, in terms of transaction, etc., and it will give you an understanding of where the situation is in the financial institution at a particular point in time. From here, you can choose to continue to do further investigation if you see a particular violation or any instances that you think it's worth following up on. You can basically drill down and look at it. So here you can see that among some of the violations that's been detected, like identity theft, voice bypass, for example, an employee access data which he should not be accessing, or basically is assessing roles or application that he has no access to or requires a secondary approval. Right, so all these will be flagged as an example, and you can look at all these breaches in better detail. So the dashboard is fairly easy to use, and it allows you for a quick drill down to look at the information by using filters, by using charts and diagrams to really understand what is the issue and take any action if you need to, right? So in this case, we have highlighted that we're interested in looking at the violation for identity theft, right? Because here it could be a violation in terms of either access or data, or or any other violation that which requires approval or which requires override of particular permissions. So you can see all the details in terms of the business reference, the actual transaction that's been carried out, what is the nature of the issue itself. For example, in this case, he authorized a record which should not be authorized in the first place. And then by clicking on the business reference itself, we can actually look further into the actual transaction that's being done. So here we can see exactly what is being done here in terms of transaction above threshold. So so in this case, he is not supposed to approve any transaction that is above the amount of $500,000, but he has done so. And why? Right? Because clearly his role does not allow him to do that, and he doesn't have the authority to do it on his own or without having approval from a manager or a second person. So here we go back again, and then we can start looking at the time in which it happens, and we can look at the various scenarios in which the action could happen and why at which time, and then we can look at the various channels as well as the particular transaction that's being carried out. So I think this is just more information on how you can drill down further and then look at it and highlight it if necessary. Here you can see that the amount that has been approved in terms of sending currency, etc. And you can see from the channels, which domain is coming from. For example, if it's coming from the e-banking or it's coming from your online banking, etc., and for which particular user or client, right? So again, this could also be occlusion from identity theft of the client's data in tandem with the employee authorizing a fund transfer of money out of the client's account. So here, I think there's many ways in which we can do, and the key thing out of this is that once you have this, the system automatically alert the person, the regulatory compliance person, or the officer in charge of prevention, and send an alert. So at that particular point in time, you know, when the transaction is still happening, when the crime is being committed, you know, you can actually quickly have a verification of what is happening, right? So if you go to Peter right now and check why is he authorizing a transaction which is above his role, and you know, why is he accessing an account which probably may be dormant, etc. So we can really see and understand what's the nature of the process, and if this is just a one-off issue, or this is again a syndicate that is trying to move money or to launder money illegally from one account to another. So what if it's detected, right? So again, as I mentioned earlier, if it's detected, you know, you have an email that is sent to the investigating officer or the compliance officer, and the compliance officer can decide what needs to be done. He can activate the security guard or whoever to check on the person himself. I mean, since we know where he's logging in, where it's happening, we can address this very quickly. So here, again, in terms of NetGuardians methodology, I think what we're emphasizing here is that we are looking at a real-time employee actions review. So as the transaction is being carried out, as the operation is being carried out, we are running analytics on his behavior. We are running analytics on his transaction to see if this fits within his profile, or if he's doing anything which may be suspicious or which is abnormal. Again, all these the sensitivity of all these rules can be configured, can be tuned. You know, for example, if we say the bottom 1% of his activities, so we can see that every single time he do something, if it in the bottom 1%, it's been flagged for further analysis, and then we can see whether we should take further action or not. So this is a much more proactive approach in the sense that we look at the human and we look at his operation across all channels, across all layers, and all the transactions that he's doing, right? So this is not very specific to just one mode of operation or one particular channel or just a particular application that he's accessing. So this goes towards all everything that he accessed, for example, on his laptop or on his work computer at work, and we can monitor this to ensure that he is not doing things which he should not be doing. And how do we do it? So other than what I mentioned in terms of behavior profiling, we also have certain measures that we use as baseline, that we use as guideline, that we typically deploy as a starting point, right? So in NetGuardian terms, we call this the smart control objective. So when we deploy the NetGuardian solution, we also include with it a library of controls. If you think about 100 or so controls that we already have pre-built within the system itself, so that this can form as an easy access or easy start for our customers, for any institution to start deploying and look at the result that it generates. So once we have the controls in place, once we have the rules and measures in place, the next step will be, of course, to fine-tune it by using the data that is available to the NetGuardians, and then to fine-tune it further based on the behavioral transaction and how this evolves with time. Right. So an example of the previous instance, you know, we are looking at like three controls, which is transaction compliance, where transfer above threshold, right? So as you can see in the previous example, clearly someone has done a fund transfer above his threshold, and the second mitigating factor is that he bypasses the foreign exchange. So usually for any transfer to be approved above a certain amount, he needs a second approver or another person to validate it and approve it. And also in this case, we can also look at a rogue administrator. For example, how is it being bypassed, right? So in this case, probably there's collusion between employees themselves in allowing access, or in identity theft, in assuming someone's with a more powerful privilege to carry out the action. So with all this information like his IP address, location, etc., we can really trace the person that is carrying out transaction, be it the person himself or someone else who's acting as him. So to summarize this, I think let us look at the end-to-end risk mitigation, and in our terms, we do it in 5 steps, right? So how do we do it in 5 steps? So here, let us look at how to combat fraud. And with disruptive technology, we feel that the best way to do it is to bring the game to the fraudster, right? So let's fight back with technology. So they are using very high technology or very sophisticated ways to commit crime, and therefore we have to step up and also be at the same playing level in order for us to stop and prevent them from committing it further. So we need to fight fire with fire. We have to use the same technology, and in fact, with the amount of data we have, with the amount of information we have, we can actually be smarter than them. We can be one step ahead of them, and we can try to prevent any opportunity that may arise or that might tempt this fraudster from committing the crime itself. So we have to continually assess risk. We have to stay sharp and focused, and the measures and the systems that we implement must always evolve and must take into account all the changes in behavior patterns, in transaction, etc., so that it will be current and we can reduce the number of false positives in terms of validation, in terms of follow-up, in terms of investigation, etc. Of course, the other thing is that you need to keep in mind is that you need to know your business, you need to know who your counterparties are, your third parties, your partners, etc. And then you have to always stay vigilant with any threats. If there's any feedback, any review, there must be a proper process in which you follow up and investigate and do an analysis of all this feedback. So, for example, one of the measures that we have to implement is the fraud risk assessment form. So basically, like in the case of the Wells Fargo, there have been cases where employees have feedback saying that they suspect their colleagues to be involved in fraudulent practices or not following the ethics of the bank, etc. But this has been largely ignored. In fact, there has been reports, or in fact, there is litigation at the moment where previous employees have reported of harassment, basically just to sideline him or to prevent him from going further with his allegation and feedback. So we need to have a proper alignment. We need to have a proper process, and in most situations, these processes are not adhered to or are not properly completed in terms of investigation, in terms of closure, and this is not only a control breach but also a compliance breach. So let us have a quick look at how, in terms of compliance and audit, NetGuardian can help to assist you in making sure that the processes are followed in terms of both compliance, control, and also audit. So here we can see that for the cases that has been flagged as a violation previously in the previous situation, so an email has been sent, follow-up actions could have been mitigated, and then this could be filed in what we call the case manager, where all cases are filed and will follow a proper process or workflow as specified by the bank itself. One of the other measures that we can have is a whistleblower report form, where you can have a form attached to the case itself and following the workflow that has been stipulated, right? So in this case, a person can anonymously fill up this form, and for cases of corruption, malfeasance, bribery, or any type of misuse, or even if it's suspect of any misconduct among his colleagues, etc. So here, if you click on the whistleblowing form, you can just continue and create an issue. You can then put in your comments. You can fill in the forms, etc. And once this is filled up, it will be within the system itself, and it will automatically generate a workflow or be assigned to a person, a compliance officer, etc., to follow up and to log his findings, his analysis, etc., and then to close it for auditing or compliance, whether further action needs to be done, whether retroactive action needs to be done, or in some cases, if any internal controls needs to be enforced or looked at or even evolved, right? So here again, to prevent from harassment, backlash, etc., the key criteria is to allow for these forms to be done anonymously, right? So in this case, a person can go to a common terminal, access the system, create a form, and just send it anonymously, right? So even though it is anonymous, from the process perspective, it is in the system. It will be tracked, it will be investigated, and the analysis will be fully provided for each case that has been raised, and further action or inaction will then be explained in detail. So at least there's a way to track all this, and at the end of the day, in terms of compliance and in terms of management, reports can be generated to see if a major change need to be implemented, or any shift in activity or controls or any operational requirements needs to be enhanced. So I think that's more or less brings to the end of my session today. I think I've shared with you, the various practices of the internal fraud and how it can happen, the 6 C's of the fraudster, how NetGuardians will address all these issues in his proposed methodology by using or leveraging on big data, by analyzing all the data to create insights, correlating all this data automatically, and also applying behavior modeling, dynamic profiling, taking into account changes in transaction, changes in behavior, etc., to provide a more in-line controls with evolving trends of operations. So of course, when we speak about internal controls, we speak about fraud, there's always a 3 line of defense. The first line of defense, of course, through the IT layer, making sure there's no hacking, cybercrime, etc. The second layer, of course, in terms of applying all these business rules, and the third is, of course, in terms of execution and compliance. So you need to have a very strong layers for all the 3 defenses. You need to have clear processes, clear procedures to determine or to act on all these issues quickly, and where necessary, to have a system which is robust enough, which is dynamic enough to cater to the evolving trends or the evolving requirements of the financial institution. So in terms of ethics, in terms of culture, we need to encourage an open culture, and there should not be any backlash or harassment in terms of whistleblowing, etc. And there must be a conduit, there must be a channel for this feedback to be treated anonymously without any repercussions. So if we have an open culture, and if everyone were to collaborate and everyone were to cooperate, I think the prevention or the opportunity for fraud to be carried out will be reduced significantly, and it will also lead to a much efficient way of detection and prevention or investigation of all these activities. So I think the last approach is, of course, being proactive in data monitoring approach, which means that with the abundance of data that we have these days, we need to have a very efficient and proactive way in taking into consideration all these data, in monitoring all these data, and having the right correlations and right models to generate the right insights and business rules to give you the edge over the fraudster. So
I think we are coming towards the end of our time. I just wanted to say, it's really thank you for this presentation. And internal fraud is really a global phenomenon. Today, again, we had participants from different continents of the world. It's really interesting. It's really, we can see how it's a global issue. I think you can find more references and further examples here. We will send you these slides and references. So you can always refer back to these sources for more information. We have seen how it's important to be proactive. It's often too late, so the fraud is detected when it's after many years, when it's too late, and then it comes with negative consequences that we have seen in terms of reputation. And also, we saw that it's really important to be proactive. We saw that it's important to monitor user behavior, the real root of the problem, the fraudsters. And also, you have showed, Shabirin, how we can really be proactive and analyze, investigate the alerts, the red flags in a really timely manner, and afterwards, how we can also manage the end-to-end risk mitigation using the ticketing option, and how we can really follow up the process. So it's really interesting. Thanks a lot. We just have, we can take one more question, Shabirin. There was one question remaining from the middle section of the presentation. So the question is, in my bank, before a customer travels abroad, he's seeking for permission for his card to be activated for foreign transaction, and then the card department monitors the transaction pattern closely so as to ensure we mitigate fraud. Is this a valid approach? So maybe you can explain this. Is a quite manual approach, right? So there might be different, more automated, actually, ways of handling this type of fraud and implementing more profiling. Could you just give a few last remarks on this question so we can finalize today's presentation?
Okay, so if I understand correctly, this is again the standard procedure for credit card transaction, right? So I think it's, most banks require its users to notify the bank that is going overseas and to activate the card for overseas purchase, correct? So this is again to reduce the occurrence of card fraud from happening, or illegal use of the card from happening. And I think we have also seen other methods in terms of chip or PIN being used, etc. So I think this is a good approach, which is making the client be proactive. But on the other hand, there could also be clients who say that I travel a lot and therefore I need my card to be permanently activated. So I think this is just, again, talking about one channel, right? So to automate it and to make it more efficient, we should also look at other information. So no doubt that he may have activated his card and he may be going to a particular country, and therefore his spend there is sanctioned legally because he already said he is there. But by looking at his transaction pattern, we can also see that maybe it's not him spending on the card, even though he's in the right country, right? Because his transaction patterns, if we have the historical transaction pattern, we can see that maybe when he's on holidays, or he may be spending a certain amount of money, but not on certain things. So with this, again, we can get insights to see or to flag whether there could be a violation or there could be a potential fraud, right? So in some cases, maybe his card could have been stolen, could have been misplaced, etc., and maybe he have not realized it and being used by someone else. So by taking into account all the other data, there are other possibilities, especially when you look at the behavioral pattern or transaction pattern, in this case, transaction scoring. You can get better insight, and maybe you can even prevent the fraud, or at least minimize or catch it earlier before that the loss incurred is higher.
Okay.
Does that answer the question? Or?
I think so. I think we have to anyways now finish the presentation. But again, if you have any questions, please, you can get in touch with us anytime. Thanks a lot, Shabirin, for this webinar today. We have upcoming webinars. We organize 2 webinars per month. So we hope to see you at our future webinars. Thanks a lot. Shabirin, thank you very much. He joined us today from our Singapore offices. So we wish you all have a nice day. Thanks a lot.
Thank you all. Bye.